Hey everybody, it's Jennifer Delong with Upstage Real Estate, and I have on the phone Jonathan McDaniel with Interlink Mortgages. Say hey, John.
Hey, what's going on?
Let's see if we can hear you here. So the number one question I get all the time from people is how much home can I afford? Is there a trick to that, or how do you answer that?
Yeah, it's a very tricky question, and the formula is not super complex, but what we do is we base your ability to buy off of your debt to income percentage. And so, basically what we do is we add up all of the liabilities or all of the debts you have that report onto your credit, and we basically add on what the new housing cost is going to be, and then we divide that by whatever your monthly gross income is. So, let's say you've got a car bill you're paying of like $500. You got a couple credit cards with the minimum payment of $20 each. And then you got a student loan that you're paying that's $100. So we would add all those together, and that would be about $640. And then let's say you made like $4,000 a month before taxes. And so we would just divide those two numbers into one another, and that number goes in there. You would also add the housing cost to that. So let's say you're buying a $145,000 house.
Okay.
And it would typically come out to be about $1,000 a month. So you would, add your debt total. So you would have, $1,640 on there, and then you divide it by your income. That gives you a percentage. We basically play off that percentage.
Okay. So it's all a numbers game, as they always say.
It is. It absolutely is. And the best thing I can recommend to anybody who is thinking about getting ready to buy a house is there are some amazing loan officers in Jonesboro, Arkansas, and Northeast Arkansas.
Absolutely.
Yeah, do a Google search, get on Facebook, find you one that you like and you trust, and let them go in and actually help you determine what your affordability actually is.
All right. Okay, so let's say I've heard about all these different types of mortgages. There's an FHA that I've heard, all these acronyms and letters, and how do I know which one is going to be for me, and do I qualify? Let's go over the basics of them for me here.
Yeah, so just kind of like super quick, there's really four basic loan programs that we use 99% of the time. And you've got a conventional loan, you've got an FHA loan, you've got a VA loan, and you've got a rural development loan.
Okay.
Basically, the government is involved one way or another on all of these loan programs, and so they're the ones that have the least amount of down payment, and they have long terms, and they're very stable loans, both for the borrower and for the investor. So the primary types of loans we do in Northeast Arkansas, an FHA, which is it's backed by, of course, HUD, not the different division of HUD and what everybody thinks about. But it's a minimum down payment of 3.5%. It's got the one of the most flexible debt to income caps on it. Allowing you to have the highest debt to income percentage. And it's got some of the best interest rates because the government is so involved in it.
Right.
It keeps those rates very, very competitive.
Okay.
So that's one of the ones, and then the rural development is another one, and that's the zero down home loan program that's over here. It's just two drawbacks to that. There is a income cap, and it's a household income cap, not a borrower income cap, and there's a DTI cap on it that's kind of tough.
Okay, you said another acronym, DTI, that's debt to income, correct?
Yes, ma'am.
Okay. So, rural development is kind of outside of the city limits from what I understand. Is there more specific explanation of that?
Yeah, it's literally, just, it's right on the city limits. I'm doing a RD loan right now that's actually inside Jonesboro city limits. So, it's literally right on the edge.
Okay.
You know, again, my biggest suggestion here is to reach out and call a loan officer, or you know, if you're handy, you can get online or talk to your realtor. That's going to be the best.
That's the first thing. Call me and go, hey, I want to look at a house. Okay, so here's the other big question I get all the time. Credit Karma says my score is.
So I can talk about credit for hours.
Yeah.
You know, here's the deal where, you know, what most people don't understand is there's different versions of a FICO score. So, you know, depending on the version of your FICO, you could have a FICO 2 experience score, you can have a FICO 3 experience score, you can have a FICO 7 experience score.
Oh boy.
And so, you know, TransUnion, Experian, and Equifax are the 3 credit bureaus. So what happens, Credit Karma does a soft pull, and I think it's from FICO 2 or FICO 3. And so, you know, it's weighted one certain way. It looks at your debt in one particular way.
Okay.
So, you know, so what happens is every industry kind of pulls their own version of the FICO score because it's favored, you know, for that industry. You know, when you go to the car business, you know, like Central Chevrolet, and they pull your credit, you may see one score. Credit Karma may report a completely different score, and then if you came to the mortgage business and I told your FICO 7 score, it could be completely different. What I will say is this, you know, we do pull all 3 of your credit scores, and we drop the lowest score. We also drop the highest score, but we go with your middle score.
Okay.
So that's good.
Yeah, that is good. Okay, so let's do one more question here from what I've been asked, and give me a little bit. You're not a bank, so what exactly is Interlink Mortgage, and how are you legally able to do mortgages?
I'm sorry. Say that again.
You're okay. The number one question I get from most people regarding your business, and I can honestly say I've done a lot of work with Jonathan, and he will fight tooth and nail for you guys, is you're not a bank, and shouldn't I just go to my bank? So what is Interlink Mortgage, and what are you guys, I mean, are you legally able to do, obviously you're legally able to do loans, but for someone who doesn't understand, what are you guys? Tell me about Interlink.
Yeah, so, you know what, there's a designation for places like us. So I'm what's considered a mortgage broker. I work for a bank, but we are what's called a non-depository bank, meaning you're not going to come up and open a checking account with us. All we do is mortgages. So last year, Interlink did right around $2.7 billion of loans. You know, we do 1,000 loans a month. This is all we do. And so it enables us, in my opinion, to do them faster, you know, easier, and I think it gives us an edge as far as what our costs are, and from a competitive standpoint, as far as interest rates go.
Right.
But we, you know, all we do are mortgages.
Good. And I know that your pet project is VA loans, so
Absolutely.
tell me just a tiny bit about, I mean, I'm sure most people that qualify for them, they realize they qualify for them, but give me a little bit of information on VA loans just so we can get that out there.
Yeah, I mean, listen, I think it's the greatest loan program there is. As a veteran myself, we've utilized the loan platform several times. It's very, very easy. There's just a lot of misconceptions out there about the VA loan and the process.
Yeah.
So, you know, I've made it my job to kind of help correct all the coercion there is. So, you know, the big thing is it's a zero-down loan program, and there's just a ton of flexibility for it. It is set up, though, to be 100% in favor of the veteran.
Yes.
So it's just all the way around. It is very, very veteran-friendly, super easy, super fast, great interest rate.
Okay. Now I know you and I are working on one right now, and there were a couple questions because zero down doesn't necessarily mean there are no fees. There's always fees. Yeah.
What VA does is they do have something called a funding fee, and they'll charge it on some of their deals. And basically, it is in place of the mortgage insurance that most loans charge you monthly. So they charge you an insurance amount, that you pay monthly in case you were to ever default on that loan.
Right.
And VA says, hey, we're not going to charge it to you monthly. We're just going to make you pay for it all up front, and then they finance it back in the loan.
Okay.
Now, if you are just a disabled veteran, you can have up to 100% of that fee exempt from it.
Nice.
No way.
So, okay, so you mentioned a couple other, I'm sorry, you keep mentioning things and it brings me back to another question. Someone asked in a mortgage, in a typical mortgage, there's something called escrow. And I understand what it means, but I want to hear from you. What does escrow include normally?
Yeah, so an escrow account is a holding account that, that whoever your mortgage servicer is, they're going to utilize that. So what we do is you have several items escrowed every single month. So inside your mortgage payment, you've got, you're going to pay on the principal and the interest every single month. So when you see your bill, it's like $1,000 a month. About $700 of that is going to be the mortgage and the interest you're paying.
Right.
Then above that, you've got your homeowner's insurance is included in that payment. Your property taxes are included in that payment. And then if you're on a loan that has mortgage insurance, that's included in that payment. So what happens, throughout the year at different times, your mortgage company, yes, they're collecting that monthly, but then they're going to pay that money out to whoever it's owed to, whether it's, hey, I got State Farm homeowners insurance, or I've got property taxes to Jonesboro, Arkansas. They're going to write those payments for you.
Nice.
And that's why it comes out of an escrow account.
One less thing I have to worry about. But when you go see a lender and they tell you that your monthly payment is, if you go on, let's say you go on Realtor.com and they give you the little mortgage estimator, that only includes your mortgage. That does not include things that need to be escrowed into that account, such as your insurance and stuff like that.
The big thing about that mortgage calculator is it's 99% of the time I look at it, it's completely wrong.
Oh, yeah.
A lot of times it's estimating a 20% down payment, or
Right.
it's got your escrow account way too high.
Right. Okay. Well, I just want to thank you. I recorded this. We're going to see if we can catch anything from it. If not, you and I will catch up in the office and redo it. Thank you, everybody, for stopping by. If you're out in Harpole today, I am at 807 Howell today. We have some cookies sponsored by Jonathan McDaniel. Thank you. We will talk to you guys later. Thanks, John. Do you still have questions? Comment below or call me and I'd be honored to help. If you're thinking of moving to Jonesboro, take a look at my other videos. And in the meantime, subscribe. I'll notify you when new videos come out. Leave me questions below or suggestions on what you want to talk about, and I'll try to get to them. See you next time.